Kevin, welcome to the show.
Michael, Garrett, thanks for having me. Excited to be here.
Yeah, it's been a little while since we had you on last. You're my little token mobile home park guy, and man, it's like we gotta check in on each other a little bit as well. And for those who don't know you, give us a little bit of background about you and how you got into mobile home parks.
Yeah, no, absolutely. And I've never been referred to as the token mobile home park guy, but I'll take it. I'll take it. I like that better than guru. I'm not a big fan of that word, but in any event, yeah, I'll try to keep this short and sweet. So, I mean, I've been an entrepreneur pretty much my entire life. I mean, I was 12 years old with the paper route. 14 years old was installing car stereos and electronics into my older brother's cars and his friends' cars and all that kind of stuff. Anything to make some side hustle money, and ultimately got into real estate when I was 19 years old. Started buying and flipping houses like a lot of folks do, wholesaling as well, and ultimately found my way into commercial real estate back in about 2004. And that initial stage of commercial real estate was smaller multifamily properties, 12 units, 18 units, 24 units. Did some self storage, did some retail, did a just kind of tried everything out over a period of time, and ultimately found my way into mobile home parks in about 2011. And as a lot of these things happen, it was just by accident. I had never had an interest or never even considered mobile home parks as an asset class. I just happened to have a close friend that knew a banker. That banker had just recently retired, and he started buying mobile home parks. And he had told my friend about how great he was doing with these couple of assets he had purchased, and suggested I just go meet him and just to meet a new person and expand my network. And ultimately, his name was Randy. Had lunch with Randy one day, and after about 2 hour lunch with Randy, he piqued my interest in many different ways about how great mobile home parks were, and that I needed to go buy one. And ultimately, I followed his advice. I went and bought a mobile home park. It took me a little over a year to do it. About 14 months after that lunch meeting with Randy, made a lot of offers, got cold feet a couple times on deals, and then finally closed on that first mobile home park back in 2012. And actually just sold that park about four or 5 months ago. So we held that one for quite some time, and that was in Atlanta. And so since then, that first park, we did that one, and that went well. Bought the second park, see if we could replicate, the success that went well. Third, fourth, fifth, sixth, and thereafter. And so, over the past 5 years, we've actually built a syndication company, Sunrise Capital Investors, and today we own assets in 12 different markets, and we love mobile home parks. So that's the short and sweet of it.
Why do you love mobile home parks?
Yeah, I've always considered myself to be a contrarian investor. I like kind of going. Where the herd isn't going, and that might not be the case today with mobile home parks. So I feel like they've got a lot of notoriety over the last couple of years. And so, but when I got into the space, it very much was. I mean, there wasn't a lot of competition. You could pick up assets for just phenomenal prices. The cap rates were substantially higher than that of a comparable apartment complex in the same marketplace. I mean, you'd be looking at 200 basis point premium over what the same, comparable apartment complex might have been selling for. So if you're paying 7 cap, you could probably get that same mobile home park or same quality for a 9 cap, right? And so the cash on cash returns were substantially higher. In addition to that, the ownership structure, and this is one of the things that Randy kind of, again, one of the main things he piqued my interest with was it's the ownership structure looking back 10 years predominantly was mom and pop owners, 90% mom and pop owners. And, the market's been consolidated a decent amount here over the past decade, but still about 60 to 70% of the mobile home parks that exist in the world today or in the US are still owned by generational mom and pops. Typically it's either first generation or second generation. So it's a unique asset class in that, number one, a lot of them are aging out of these assets, but number two, a lot of them, they haven't kept up with the market. I mean, you guys have bought mom and pop apartments in the past, and we quite often find mobile home parks that rents haven't been raised in 10 years. They haven't built back for utilities. Their expenses are incredibly heavy. Much heavier than what they should be. They're not really running it like a business. They got friends and family kind of doing things at the property, and there's just a more efficient way to skin that cat. And ultimately, that's where a lot of the opportunities are created in the mobile home park space. And so, one of the other big reasons that I love mobile home parks, and again, one of these things that Randy piqued my interest with was the lower turnover rate. And so, the majority of the parks that we own today um, are structured to where the actual residents own the mobile home. So they actually own the physical mobile home and they pay us for lot rent. And so they're responsible for their own roof, their own HVAC, their own plumbing, anything that happens to go wrong with their home, they don't call us about it. So that's beautiful from a management side, maintenance management side. But also what that means is that it's incredibly expensive for them to move that home from one location to another. Now they are movable, but they're strapped down, they're anchored into the ground. It costs, $5,000 on average to move a single wide if you're moving it, within that same marketplace. And what we have found is that about 95% of the mobile homes that make it into a mobile home park, they leave the factory, go to a mobile home park, they never leave. And if they do leave, they leave because someone demoed that home after 50 years. They threw it in the garbage basically and put a new one there. So I love the aspect of the low turnover rate. And in comparison to that of typical rental housing, where you've got to turn over, it might take a month or two to get that unit back online, what have you. That just doesn't happen in the mobile home park space. So one of the many reasons.
I have a couple buddies that are in the mobile home park space, and some of the challenges that I've heard that they've run into is sometimes it's tougher to scale because you find these things from mom and pops and like tertiary markets. You have to self-manage them because it's tough to find good third-party managers. Mm-hmm. And so I'm just curious, is that true? And if so, how have you kind of pivoted around that to have the success that you've had?
Yeah, no, it's a great question. They're all very accurate points. The scalability, from a mom and pop perspective, I don't know if that's necessarily relevant. I mean, if you're only out there buying like 30 and 40 space parks, then absolutely, it would take a very long time to scale. That's not really our MO. I mean, we've owned some smaller parks over the years, but just like a lot of investors as they evolve, they realize very quickly that there's many more efficiencies that exist with larger asset types. And so we don't really go after those small, just because they're mom and pop doesn't mean they're small. And so there's plenty of mom and pops that own, larger 100 plus space mobile home parks, 200 space mobile home parks, what have you. And so that's typically where we're playing ball. Now, with regards to the property management side, that's an interesting aspect of this business, in that it can be looked at both sides as a pro and a con, right? It can be looked at as a barrier to entry, which is a benefit for those that are already in the space, right? They're already buying assets that have a portfolio, because it creates a lot of challenges for someone just getting started. You can manage maybe 1, 2, 3 of them yourself, but at that point in time, you have to make a decision. And as Michael and I were talking about when we were just, interviewing your show, as you have to start hiring folks internally, because there's not good third-party management companies. And so you basically have to commit. If you want to own more than just a few mobile home parks, you've got to make a commitment that not only am I going to build an investment business, but I'm going to build a property management company. I don't really want to, but I have to. And so we went down that same road. We attempted to leverage a few different large third-party management companies that have been in the business for 30, 40, 50 years, that were on a national or regional scale. And we went through a testing phase. It lasted about a year and a half through 3 different companies. And it was all catastrophic. Each and every one of them was an absolute disaster. It didn't work. And so ultimately, again, we were at the point in our business where we had our own property management company, but we had to basically double in size, as we were growing. And that's ultimately what we did. So
what is the best practice? And you maybe, like all of us, maybe made some mistakes early on, but what is the best practice if someone wants to get into the mobile home park game, knowing that they have to self-manage? How would you do that over again? How would you get yourself into the property management side of that business?
Yeah, that's a very good question. Looking back at how we did it, I would, now that there's a lot more folks in the space. When I got started, I mean, it was actually pretty difficult to go find people that had information about it, that were openly talking about investing in mobile home parks. Nowadays, it's very different, and so there's many different organizations such as ours that are already established, that are already doing their thing. I try to, honestly, if I path of least resistance, I'd go back and try to find how to add value to a group like that, and find out what I'm really good at, whether it's raising capital or finding opportunities. And I'd try to, wiggle my way into into a group that's already established, that already has that part of their business, in place and built. That's what I would do, because I don't know if there's another easy way to do it. I just don't. I mean, I think it's just like we were talking about again in your show, using acquisition fees and asset management fees and whatever fees you can to pay for this property management company. Because the profit, at least in our business, we found that about 100 or 1,000 units is about the threshold of where, having necessary staff on the property management side to where it's actually at least breaking even. It's slightly in the black, because it's not a profitable endeavor at all. It's just not. It's a necessary evil. And so I don't know if there's a much easier way to do it unless you go out and buy a existing property management company. We actually had looked at doing that. We looked at buying a smaller tiered multifamily. We looked at a couple multifamily property management company, and then just basically reshaping it to also encompass mobile home parks. And we just found that also to be too much of a challenge. And unfortunately, there's not many, again, competent mobile home park management companies out there. So that strategy of going to buy one of those probably isn't the best approach either.
You mentioned value add, and obviously in multifamily, we go in and we renovate the outside, we renovate the units, we tighten, and then for that we ask more rent. What does a value add look like in mobile home parks?
Yeah, and that's a great question. So you still have like the aesthetic side of things. I mean, going in and repaving roads, either installing a clubhouse or repairing a clubhouse that might be there. Tree trimming if there's lots of tree. We have lots of communities that have lots of trees, and a lot of times trees are very expensive, and folks kind of defer those costs when they're in the ownership side. And so those are more the aesthetic side of things. But then also very common with mobile home parks, what you'll find is that we acquire a park. Let's say it's got 100 lots. 80 of those lots are, tenant-owned homes. So they're owned by the residents themselves. And let's say there's another 10 homes that are park-owned. Some way, shape, or form over the years, the park acquired 10 units. Maybe someone passed away and handed the title back to them, or maybe they just got up and walked away, abandoned it, what have you. And a lot of times those park-owned homes, it's many situations they're not 100% occupied. So we might have maybe a handful of renovations. It could be upwards of, I think the biggest community that we've ever done as far as vacant park-owned homes where we've had to renovate them was we got the park and had 40 vacant park-owned homes. And so just like you guys are renovating interior units, we're basically, doing 40 flips inside the property when we take it over. In addition to those, we're also going to bring in new homes. We're going to infill those vacant lots that might be there. And so if it's, again, 100 space park and there's 10 vacant lots that have infrastructure in place, we're going to go put new orders in for, a brand new single wides or double wides and get those into that community as well. And so just one of the many things as far as the value add side, some of the other big ones are, back 40, 50 years ago when a lot of these parks were built, water and sewer wasn't a massive monthly expense for most folks. And so typically these parks were built with a master meter to where the park paid for the water and sewer expenses. And so that's sort of a fairly significant line item on the P&L. And so what we'll do is we'll basically go in and put individual sub meters at each one of the lots, which we can just literally drop that expense right down to the bottom line. So that's a huge value add component, one that a lot of folks overlook when they get into the space. I mean, if I see $150,000 or $200,000 a year water bill on a P&L, I know right then and there, 95% of that can drop down to the bottom line and be hitting the NOI. So.